Oh, you have a class?
No,
Is that real estate empire?
Bienvenido a todos, ¿cómo están? Mira, la clase de hoy, yo tengo a Jesús me pidiendo para hacer la clase en inglés, porque ya tenemos muchas clases en español. Entonces, cualquier cosa, yo voy a hacer la clase de hoy en inglés, pero si tienen alguna duda o pregunta, pueden me preguntar y puedo repetir en español sin problema. ¿Ok? Entonces, vamos a empezar aquí un momentico solo. Okay. So let's see. Just a couple of seconds here, guys. Solo un momentico ahí. So, welcome everybody to the class, starting at 10:15 to allow people a little bit of a chance to join. My name is Bruno. I am a top producer of PRMG Dadeland. The class today will be in English as requested, just because we do a lot of these classes and they're recorded in Spanish. So, in order to give everyone a fair chance to, understand and attend the classes, we're going to do this one today in English. If by any chance anyone has any questions at all, please feel free. You could type, you could unmute yourself, you could let me know, and I'd be more than happy to answer your questions. See if I could move this thing down a little. There you go, better visual. All right. So, big thing with my kinds of classes, I do my classes very different than most. The idea is to show you how things work. Not just tell you, but kind of show you. That's something that most loan officers, I know some will use like a PowerPoint. To me, that's not necessarily the most effective. To me, I use this worksheet. This worksheet is the same tool that I use when I pre-qualify a client. So the idea is to give you a realistic idea of how a pre-qualification works. Why? Well, you guys already know once you get a lead, once you get someone's contact information, someone's interested in buying, the first step you're going to want to do is pre-screen them to find out if you think they're a good candidate for a home purchase or for a mortgage specifically. And then after the pre-screening process, you're eventually going to send them to me or to whichever lender it is that you're working with. So let's get started real quick. So one of the things that I always tell people, a lot of times real estate can become very frustrating if you aren't, I want to say, attacking it from the right angle, right? What you want to do is you want to make sure that you're pre-screening your clients, again, to make sure that you're not wasting all of your time and resources on people that at the end of the day won't qualify. For example, I tell people all the time, you shouldn't be showing homes to someone who isn't pre-qualified. At the same time, imagine this, you get a lead from the office. You get that phone number. Let's say you get 10 leads in that day. What are you going to do? Why don't you just send those 10 leads straight to a lender and then they pre-qualify them? Because it doesn't work that way. Unfortunately, lenders do tend to be very busy. And if you want to maintain the attention of the lender, if you want to have that expedited service, it's always important that you do a little pre-screen and find out. You will find that a lot of people, they will disappear on you, they will blow you off, they won't show up to appointments, they won't send you documentation. A lot of people are actually out there just, trying to get information and not really interested in purchasing a home. So what do I recommend? Let's start here. You just got your first lead. Okay. Your first step once you get this lead is going to be to do a little pre-screen. I'm going to focus quite a bit on this pre-screening process today. I feel that the realtors that I work with that are the most successful, that close the most consistently, understand the pre-screening process. They, as opposed to bringing me 10 clients that are horribly qualified, and we sit down for an hour with these clients running their pre-approval just to find out that they don't qualify, these top realtors have learned how to pre-screen in a way that out of 10, maybe 3 or 4 don't qualify. The rest do qualify, which is outstanding because that is not an average expected turnaround ratio, right? So number 2, I would say. So first thing you want to do as a realtor would be to do the pre-screen. Again, we will get into the pre-screening process, right? Number 2 is going to be to try to either collect the docs from the client or send it to the lender so that we can start our portion of the pre-approval process, okay? So let's do this here. And then the final step is going to be for the actual pre-approval. The pre-approval can be either in person, which is what I personally highly recommend, or it can be virtual. So let's talk a little bit about this pre-screening process. This is really the most important part. By the way, I love when you guys interact. So if anyone wants to unmute, speak, if anyone has any questions along the way, please, feel free, okay? So let's talk about the 3 things that somebody needs to get pre-qualified. The first thing is income, okay? When you get one of these leads, the first thing you're gonna do is call them. And then you're gonna, they're gonna pick up the phone or they're not. You wanna track your leads. You wanna make sure that you're keeping track. You have a system to see, okay, who did I call? Who answered? Who didn't? Who's interested? Who's not? Beyond that, when you finally get the attention of the client, first thing you wanna do is, introduce yourself. Hey, how's it going? My name is Bruno. I'm calling you from Real Estate Empire. I saw that you're interested in purchasing a home, right? And after you've gotten past the formalities, your next step is going to be to identify the 3 key things we need for a pre-screen. Number 1 is going to be income. Number 2 is going to be credit. And number 3 is going to be assets or money. So, what do you need to know about income? Well, there's 2 kinds of income, and it's important that you ask them which type they receive. So the first type is W-2 income, and the second type, here, let me make a little more space here, and the second type is self-employed. Self-employed income is also known as 1099, 1120, which is when you own a business, 1120S, 1065, any one of these where you work self-employed, donde tú trabajas por su cuenta, okay? So you get on the phone with the client, start warming them up, introduce yourself, and then dive right into it. You're not here to try to just establish a relationship with the client. Again, you will end up wasting your time and getting very frustrated because none of your deals will ever go through because you spend all of your time stuck between get the lead, send to lender, get the lead, send to lender, get the lead, send to lender. The truth is that if you pre-screen the client, if you try to collect their documents, if you do these things, it makes your team, your relationship with the lender more efficient. And it allows us to better attend and service you, not only you, but everyone else that we're helping, correct? What happens most of the time is somebody will, again, get the lead, skip the pre-screen, and then just send to lender. What happens is you're gonna send me the contact information to a client. I'm gonna be busy, probably with an appointment. I'll get to that text message or that call probably within an hour or 2. By that time, I'm going to call the client. The client's probably back at work, so they can't speak. and then I'm gonna call or text them a couple times that day. They're not gonna answer. I'm gonna get back to you. And then the client takes another day or two. And then when I speak to the client, the only thing I'm gonna ask them is for their documentation. So we just spent 1 to 3 days to basically ask the client for documentation so that I could pre-approve them. Imagine if we could just cut that out and just, hey, look, you speak to the client, you find out if they're good or not, you request the documents, send them to us, bam, we get them pre-qualified within 24 hours. This is the expectation that lenders are setting nowadays in today's very busy real estate market, okay? I will work with whoever in whatever form they want, but again, this is a system that I've developed with a lot of the top producing real estate agents from Real Estate Empire that I work with, and it is effective. It is effective, okay? So, questions so far? Preguntas hasta ahora. Perfect. So, hi client, how's it going? My name is Bruno. I'm calling you from Real Estate Empire. I saw you're interested in buying a home. Have you ever bought a home before? Do you know what kind of home you want? Okay, perfect. All right. So your first question when you speak to this client is going to be, are you still working? Are you currently affected throughout COVID? Were you unemployed throughout COVID? Did your work situation change throughout COVID, right? We have to find this out. Reason being, a lot of people during COVID, it's not so common anymore, but let's say a month ago, we were still getting a lot of these people where they're like, hey, look, I'm furloughed, but I still have my job. But if you're furloughed, you can't buy a house because you don't have the income coming in. And they say, no, but I'm getting paid anyways, I'm just not working. Right. But the bank is going to need to document 2 years prior of income and work history. And we need to show continuation of whatever they're making today, theoretically, for the next 30 years. So someone who has always worked and made $20 an hour and is now affected by COVID and they're furloughed, but they're still making that $20 an hour. However, they're not working it, they're just receiving it from their employer. At this exact moment in time, cannot buy. They cannot buy until they go back to working that full-time $20 an hour, because that is an income that is likely to continue for the foreseeable future. Questions about that? Perfect. Next one, income. Let me see if I could merge and center these. Type of income. Very, very important question, okay? You have to ask the borrower if they work W-2 or self-employed. And I will get into why right now, okay? When somebody works W-2, they're gonna have pay stubs. Okay? On their pay stubs, it's gonna show me their base pay, their overtime, their bonus, their year to date, which is incredibly important for me to calculate income, their rate of pay. It's going to show me a ton of information. But the two most important things it's going to tell me is the gross and the net income. Okay? So when somebody works W-2, every 2 weeks or every month, I could see how much they're making. Every single, every 2 weeks, every month, again, I could see how much the IRS is taking out in taxes from their account, okay? If by some chance somebody works self-employed, they do not have pay stub, okay? What does that mean? I don't get any of this information at all. Because someone who is self-employed declares what they make at the beginning of next year. Does that make sense? So the bank, this is key to understanding why this is important. The banks will only consider money that somebody has declared and paid taxes on. So someone who works W-2, I can see that with each pay stub. I could see how much they've paid the IRS. I can use all of that income on their pay stubs. Somebody who is self-employed is going to report what they made this year, next year, and they have the option to declare expenses. So when we're looking at a W-2 employee, I can use the gross income, which is, in other words, before taxes. Okay. When somebody is self-employed, I have to use their net income, which is after tax and loss. As real estate agents, you guys can relate to self-employed income because you all make a 1099. So what does that mean? If you made, in 2020, let's say you made $80,000, okay? But then at the end of the year, you go to your tax preparer and they say, hey, look, you owe $15,000, $20,000 to the IRS because you made $80,000. You're probably going to say, no way. What can I do? So they're going to say, okay, that's easy. So what we'll do is we'll file $70,000 in losses. Okay. And now your net income is about $10,000. So while it's good to help you pay less in taxes, it automatically means that you don't qualify to buy anything because you're telling the IRS and banks that you only made $10,000 the whole year. So if we grab this and divide it by 12 months, you made $833 per month. And it doesn't matter that you could prove it through bank statements. It doesn't matter that you can, oh no, but I made it. I just said, oh, but it doesn't matter. The banks will use the net income for the qualification if you are self-employed. Questions? Perfect. So that said, this is why it's so important to ask the question, do you work W-2 or do you work self-employed? Because 90% of people who work self-employed will do this to their taxes right here. And they will tell you at face value, I made $80,000 for the last 2 years. So let's get back to this real quick. Income questions. Which type of income, W-2 or self-employed? The next question you want to ask is, have they been working and filing consistently for the last 2 years? Again, we need to prove that the client has been working for 2 years. We need a 2-year history plus going forward. So if, let's say, you have someone who's 18 years old, they just started working their first job 6 months ago, unless they have a justifiable reason, like they just graduated college or something, they're likely not going to qualify simply based on the fact that they don't have a 2-year work history. Questions on, actually another good one. How much income should you look for in a client? Again, W-2 is key. If you find a client that makes W-2 income, the number they tell you will likely be accurate. If you find someone who is self-employed, I highly recommend taking a look at their Schedule C and their taxes really quick, or asking them the question, do you remember if this was gross or net? Si tú recuerdas si eso era bruto o neto, okay? Because again, most people will tell you they make a lot when they're self-employed, but then they file expenses and they have almost nothing. Another good question to ask them, if you're trying to find out, let me do this real quick. Another good question to ask them to try to help you find out if it's gross or net. So if someone is self-employed, give me a second here, cut this, bring it down one or two more. Another good question that you could ask them is, another good question you could ask is, okay, so borrower, this $80,000 that you're telling me that you made last year, you are self-employed. Do you know if it was net or gross? Most of the times people don't know the difference. But you know what they do know? Is if they paid a lot in taxes. Someone who made enough money to qualify to buy a home likely paid between like $6,000 and $12,000 in taxes. That's just a reality. And that's just in 1 year. They need to have filed that for about 2 years. So to help you get around the self-employed question, always ask, was it net? Did you pay a lot in taxes last year? That may help you identify. Again, if they paid between like $6,000 and $12,000, they probably have a pretty decent income in their taxes in net, okay? And then the final one obviously is working and filing for the last 2 years. Questions about income, finally.
Excuse me.
Yes, Esther, how are you?
Hi, good morning. What happened if the lead that we have a gross income on the previous year less than the new, because this must be 2 years, right? So
yes.
What about if the 2018 they have like 37,000, and the 2019 they have 60,000?
Perfect. That's an excellent, excellent question. Keep them coming. So here's the reality of how I'm going to calculate their income. Now, you said gross. Did you mean gross or net?
Gross.
Okay. Are they W-2 or are they self-employed?
And W-2.
Okay, perfect. So W-2. W-2 is calculated differently. Okay. In W-2, I'm going to look at their pay stubs. Okay. And their pay stub is going to say maybe they make $25 per hour and they work, let's say 40 hours per week, right? Or it'll tell me that they make, let's say $3,000, bi-weekly. So on a person that works W-2, I can justify, and even if they made, because naturally people who work, they're going to make more the next year. So if they're W-2, I can use their pay stubs and it's not a big deal. It's actually ideal. Like that's the best situation you could have. Does that answer your question?
Yes, I have another one. What about if the lead have changed the jobs? So he worked 2 years, but he has one in one company and then the other one in another company. That affects something?
So, good question. Were both companies W-2?
Yes.
Okay. You can go from working 1099 to a W-2 job, no problem. But if you go from W-2 to 1099, it is an issue. I'll get into why in a couple minutes. Were they both in the same line of work?
So,
like for example, como si él era un camionero en lo primero trabajo, en lo trabajo nuevo también es un camionero.
Something like that. Yes, sí. Vamos a ver, en este caso sería que era manager en una compañía y pasó a ser manager en otra compañía.
Perfect. Entonces sirve, no tiene problema.
Oh, ya.
Entonces con ese cliente que tú quieres hacer, ya que tú tienes más o menos la información, tú puedes recoger los documentos de los clientes o puedes enviarme la información de los clientes. Colecta las dos colillas de pago más recientes, los taxes y los W2 de los últimos 2 años y una copia de su licencia. Enviar para mí, yo puedo revisar todo y nosotros podemos marcar una cita para vos sentar con los clientes o hacer por Zoom call la precalificación.
Okay. Mhm.
Mira, automáticamente hablando español nuevamente. Está raro hablar inglés ahora. So, back to it. Esther, let's say that this client was 1099, okay? And let's say that this was what they made net. And this is important because if they're W-2, I could use their pay stubs, right? If they're 1099, I cannot use their pay stubs. They don't have pay stubs. They only file their taxes at the end of the year. So look at how we calculate self-employed borrower's income. I'm gonna grab what they made in 1 year. I'm gonna add it to what they made the year before, okay? And then I'm gonna divide that by 24 months, which is gonna leave me with about $4,041 monthly. So this would be their monthly income, okay? Now, what happens a lot is you'll have someone that made, let's say someone made, even if they made $60,000 this year, the year before maybe they made $25,000, it leaves them with a very low average. This is what they make monthly. Questions about that? Perfect. Give me 2 seconds, guys. I just got a message from my YouTube.
Bruno, do you hear me?
Yes. Hi, Teresa. How are you?
Fine, fine, thank you. In this last example that you showed,
Mhm.
that you add up both salaries in a year and divide it by 24, is that in the coming from a W-2 to a 1099 the second year?
No, so
Or
this is assuming 1099 or self-employed.
that in both years?
Yes.
Okay,
So,
okay, gotcha.
So let me kind of give this give you like a brief kind of explanation, because this is the part where I start to lose people. That's why I'm spending so much time on income. The rest of the stuff is relatively easy. Okay. So again, let's say 2018, 2019, 2020. Okay. Let's say you're W-2, W-2, W-2. Okay. You've worked W-2 for the last 2 years plus currently, right?
Okay.
Let's say here you made $15,000 because you just started, you just got out of college, you made nothing, right? Then here you made $35,000. And then suddenly you're making $55,000 this year, right?
Okay.
It is normal for someone to start making more money year over year. The bank isn't going to penalize you for that, right? When you're W-2. Why? Because I can see your pay stubs showing me every 2 weeks consistency. $20 an hour, $20 an hour, $20 an hour. You know what I mean? I can actually feasibly see the income. Again, it's not just income you make, it's income that you're declaring and paying taxes on, right? It's
Right.
the actual money that you're paying to the IRS. So I can see from your pay stubs that you make, let's say, 25 bucks per hour. So even if you made this lesser amount, W-2, in the previous years, because if you have a strong, solid history at this job or at this position, or even if you switch jobs, but I could prove, no, listen, this person works 40 hours per week always, okay? I can use this income of what you're making right now. I don't have to, I do have to document that you've been working for the last 2 years. However, I can get away with using this higher income and not have to hit you with, you know, the lesser amounts from these previous years. That is if you are W-2 across the board, right?
Okay.
If you are, let's do you were 1099, and then now you're W-2, okay?
Mm-hmm.
Let's put the same exact numbers. So here, Let me open this up a little. So here I can use this income, right? I can use whatever it is that you're making per hour. Not saying 25 bucks an hour gives you 55,000, but whatever it's going to be, right? Here you were 1099, but now you are W-2. So as long as you're working it full time again, I can also use this income. Make sense?
Yes.
Now, if you are W-2, let's do another one. So 1099, 1099, W-2. Here, let's move these around a little bit, make it cleaner for you guys. Actually, no, I gotta leave it there. Okay. Now let's say you are 1099, 1099, 1099.
Mm-hmm.
Let me just grab a couple here, clean this up. Sorry, I like to try to keep things neat for you guys so it all makes sense. All right, so now let's say you are 1099, 1099, 1099. Question, as a realtor, you don't get a pay stub, right? Because realtors make 1099 income. You don't get a pay stub. You declare your taxes at the end of the year. So whatever you've made this year, I can't count on that income because you haven't paid taxes on it yet. You're going to pay taxes on it next year, right?
Right.
So I'm going to use your income from, let's use the same numbers, 15,000, 35,000, right? For 2020, I am going to add this plus this, and then I'm going to divide this by 24 months. And this is going to be your income, which is very low. At $2,000, you will not, or $2,000 a month, you will not qualify for anything.
Okay, you added the 3 years. I was writing. You added the first year and the last. I didn't see that.
You add, so again, 2020, you're not going to have a reference point, right?
Okay.
Now,
Okay.
the bank
15 and
is,
35. Okay.
you see what I mean? So what you're going to do is you're going to grab what you had in 2019, add it to what you had in 2018. Again, net, never number. Net is the lower number. It's the one where all the expenses are taken out, okay? And then you're going to divide that by 24 months. And that's going to give you the monthly income. Why is it so low? Well, because he had very low income in 2018. If he had the same 35,000, look at how now it goes up a little bit. Still very low to qualify, but goes up. Does that make sense?
Okay. Yeah.
Now, let's do another one last one. We have all 1099.
One more question.
Uh-huh.
In this last example, what if he had done his tax return for 2020 and he's showing you the net on 2019 and 2020? You would take those 2 years then?
I mean, so far he couldn't have filed because they don't allow you to file your taxes until January.
Oh, I'm sorry. Yes, I mean, if it was 2019 and 2018 and 2017, then you would just use the last 2 years and average it out.
We always only use the last 2. We never use 3 years.
Okay.
I just show this to you to kind of explain to you, because when you guys are speaking to these clients, a lot of times they're going to say, "Oh, but I don't understand. You know, I've this year I've made more than I ever have. How come I can't buy?" Well,
Okay.
yeah, I understand that you're making more this year than you did last year, but you haven't paid taxes on it yet, so the bank can't count that as actual income. You know what I mean?
Got it. Okay.
Excellent question, by the way. I like it. One last little scenario. So here we have all 1099. Here we have all W-2. Here, let me actually move this around a little bit. Organize this for you guys. Here we have all W-2. So all W-2, all 1099. Here we have 1099 to W-2. And the tricky one, W-2, W-2, 1099.
That would be the same scenario.
Would not.
No.
Think about this.
Oh no, you get the gross on the 2018 and 2019.
Nope.
No.
Let me show you what happens.
Okay.
So let's say here they made that 55,000, right? Okay. Here they were W-2. Here I know how much they made, the 15,000, the 35,000. However, now they're 1099. So guess what happens?
Hmm.
They haven't filed 2020. They can't file 2020 till next year. When that happens, I have 1 year of taxes. So now this person needs to wait till 2021, or actually 2022, to file 2020 and 2021 so that they could qualify.
Repeat that.
So remember how we calculate the income, right? W-2, I could see what they make today. 1099, I could see what they make next year, right? Like, I can only see what they're making today next year. So if someone goes from W-2 to 1099, they automatically do not qualify for at least a year, and a lot of times 2 years.
Okay.
Why?
Okay.
Because again, what they're making today, I can't count on that income until at least next year. You know what I mean? And remember, I need 2 years. So I need
Yes.
2 years of 1099 income. There is such
Yes.
thing as a 1-year program, which we'll get into in another class. But that program has very, very high like minimum requirements, such as 700 credit score, very low debt to income ratio. They practically can't have a car. Like the car has to be paid off. Like it's a very hard program to qualify for, but it does exist for people who have a very robust financial situation.
Right. Okay, so they have to have already filed their tax return for 2021, so that you can pick that up.
So, and
2020 and 2021 tax returns.
Exactly, which you can't file in advance. You know what I mean? So that they have to wait that year or two if they just switch to 1099. A lot of times I'll tell people, hey, go back to W-2. You know what I mean? Well, I do get creative. I do help people. I do tell them how to file their taxes to qualify. Right now, it's very difficult to keep up with, like, hey, I want to buy next year. Can you look at my taxes right now? It's like, hey, send me your documentation. I'll get back to you in a couple of days when I have a second. But this happens a lot. We have a lot of clients that want the help to qualify next year, and I could definitely help them create a plan and a structure for them to get them in line, get their taxes in order, get their income, prepared. But you're going to see a lot of people that have this situation. They go from W-2 to 1099 and they don't understand why they don't qualify. Questions on this little scenario here? Straight W-2, straight 1099, 1099 and W-2, and then W-2 to 1099. Questions on that?
No, you've been very, very explicit.
Perfect.
Thank you.
Keep the questions coming. I like it. So, questions on income. Preguntas o dudas sobre los ingresos, la parte de ingresos. Perfect. The last thing, la última cosa que voy a mencionar sobre ingresos. Tú quieres buscar clientes que ganan cerca de 50,000 pesos por mínimo para comprar una casa por año. No hay que necesita ser una persona que gane 50,000, tal vez tiene dos que gane 25, ¿ok? Pero busca los clientes que ganen cerca de 50,000, o tal vez dos juntos que gane 25 o algo, pero de una forma o la otra gane más o menos 50,000. Let me go over that in English real quick. So, whenever you're pre-screening a client, you want to find the clients that make about $50,000 per year. Okay? It's not that one person needs to make 50,000, it's that everyone applying for the loan together makes about 50,000. Let me show you why real quick. Teresa, I'm going to pick on you a little bit. Is that okay?
Okay. Yeah, that's fine.
What is first of all, do you have experience? Are you super fresh? Or you just need a real estate?
No, I have experience. I've been in the business for a while.
Perfect. You might be familiar with some of this. So, question for you. What is the minimum that someone will buy a small, not the best, minimum that someone will buy a single family home in Miami for? Miami, Homestead, wherever.
I've been out of the market the last 2 years, so that's why I just stepped in, back in, and it's changed a bit. But I would venture to say around the 250,000.
That is the perfect number. You're off to a great start.
Okay.
I always tell people, do houses exist at 240? At 230, maybe if you go to Hollywood, you know what I mean? Get a little bit of an older house, smaller house, maybe. But 250 is literally the number that I always use. If you want to buy a single family home, the cheapest you're going to find it is right around 250. And you're going to be extremely limited to options, right? And you're not going to be in like, you know, a prime area like Kendall or Doral or Hialeah or anything, right?
No.
So automatically, $250,000. Let's say this person has good credit. Let's give them a 2.875 interest rate, right? Which is a very good interest rate. This person needs to make. So automatically, when I put this number here.
I'm on Zoom. I'll call you back.
So I'll give you a second.
That's fine.
So automatically, when I put this number here, you're going to see that I have like a solid estimate, okay? Principal and interest, taxes, insurance, mortgage insurance, right? Single family, so no HOA. So this cost.
I'm sorry. I was gonna ask you at the end. Now that you have the form, do you supply this? Do you have this like pre-printed so we can just fill it in as we ask the questions over the phone?
No.
A pre-qualification form.
So this is actually how I pre-qualify people. It is extremely tricky and sensitive, and there's a bunch of rules that don't apply here. You know what I mean? So it's kind of like me being a pilot and letting you fly the plane kind of thing. So what I do is after we pre-qualify someone, and what I usually recommend is that we do a face-to-face consultation with the client. I do this worksheet in front of the client and in front of you. And you'll learn so much from watching me play with this sheet. I promise you'll learn more in 6 months than you have probably in the last 10 years in real estate. I do get that feedback every time I do one of these face-to-face consultations. And what I do sometimes is I will lock it so that you can only edit the sales price, the taxes, and the homeowners association. And I'll send it to you so that you could pre-screen properties for the client after they're pre-qualified. But as far as me sending the actual worksheet itself, no, because this is very, very tricky, and it's very easy to give false information to the client.
Okay.
So let's say this person makes, what is the, I know I said 50, but give me the lowest you think that someone can make to qualify for a home per year.
I really haven't done that in such a long time. 40, I don't know, 40,000, 45?
Let's go 40,000. So 40,000 divided by 12 months gives us their monthly income, right? So let's start off here. Right now, I don't have a sales price, but I do have their income. You follow?
Okay.
Right now, I have that they make $40,000 a year. So $40,000 divided by 12 is $3,333, right? So this is their monthly income. Now, a lot of lenders will tell you that a pre-approval is the price of a home that someone can afford. But have you ever had it happen where someone's pre-approved for 300, but you show the lender 3 or 4 houses at 300, and they tell you that they don't qualify for those houses?
Well, yeah, because by the time you add the taxes and all of the other surprises that come up, the taxes are very high sometimes.
So what happens is that those lenders are cheating the client by pre-qualifying them for a higher amount just to tell the client they qualify for that, but they're shooting the taxes and the insurance super cheap just to get the client, just to show the client that they qualify for that. So then they're having you, the realtor, run around the city showing you a bunch of houses that the client doesn't truly qualify for. So how does a pre-qualification work? A pre-qualification is not the price of a home that someone can buy. It is a monthly payment that someone can make on a home. Does that make sense?
Mm-hmm.
And that's why the taxes and the insurance adjust, right? That's why they can affect things. So let's put here 250. Or actually, let's do this. Let's start off with 100,000. This person makes 3,333, and they want to buy a $100,000 efficiency in Hialeah.
You can't even find that in Hialeah.
Because that's all you'll get for 100 grand in efficiency. So when I put this number, automatically I get an estimated monthly payment with everything included: principal and interest, taxes, insurance, mortgage insurance, everything, right? This is the total. This monthly payment cannot exceed 45% of what this client makes per month. That is called a debt to income ratio. That is how a pre-qualification works. So it's actually not that hard to figure out kind of on the fly if you really think about it, right? So here, $100,000 means $684 monthly. This guy makes $3,333 per month. So this monthly payment, this $100,000 property, represents 20% of what he makes. The limit is 45%. So I can take him to 150, and you're going to see this number over here change. Check this out. Boom, he's still at 30. He can go higher. He still qualifies for more. 200. Boom, he can go a little higher. He still qualifies for more. 250. He's way over. So he will not qualify for 250, making $40,000 a year. How much will he qualify for? 230, too much. 220, too much. 210. Boom. That's maybe 215. Seems to work, right?
Okay.
What home are you going to find for 215 in Miami?
No.
Nothing, right?
No.
So what happens now? What does that mean? He likely has to find a townhouse, or more than likely an apartment, right?
Right.
Condos are conventional only, right? So
Right.
I'm not going to switch over to the whole conventional tab thing at this moment, but what is the minimum association for an approved condo where someone could do 5% down? What is the minimum association they're probably going to need? It's probably going to be close to $300.
Yes.
So they suddenly don't qualify again. So now their qualification goes down to 160, no, 170, 175. And at this point, you're going to be showing a client who wants to buy a 3-2 single family house in Hialeah, pay no more than $1,800 because that's what everybody wants, right? You're going to be trying to show them $175,000 apartments. You see what I'm saying?
Yeah.
Now, another thing, if you take a second to glance at this, there's actually two maximums. This is assuming FHA. What is the difference? You notice how the ratio is the same? So what's the difference? The difference is that they're the same number, but this back ratio, this back DTI, includes expenses. So Teresa, quick question for you. How much do you think, how much would you say is like a normal car payment in Miami? Like for like an average person that makes $40,000 a year?
350?
350, 360, 380, perfect. 350, they instantly don't qualify with just a car payment. Now let's assume that they have credit cards, minimum payments, 35, minimum 50, minimum, you know, I don't know, 25. So easily you can see, unless they have a lot of money for a down payment, for a strong down payment, right? Like very, very strong down payment. Unless they have very, 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 like practically no debts, you could see why you probably wouldn't want to waste your time with someone that makes only $40,000 a year.
Yeah.
Now, if I just change this number to $50,000 a year, look at how suddenly they qualify for this, no problem. Get rid of the association, put them at 250 purchase price. Look at that. They even qualify for more. They could probably go 260, 270. Here they're over on their back ratio, but we could just have them maybe pay off these little credit cards, leave them with just their car payment. And look at that, we could probably even get them maybe 280. No, 270. You see what I'm saying?
Yeah.
So that's why $50,000 is a good number for you to look for. Anything less than that, you will likely end out wasting a lot of your time.
Remember also, when you put in the taxes in that figure, I don't know where you're pulling the taxes from, but that those taxes in the property will vary, especially when it's a new purchase, they go up substantially. So you got to be careful to calculate the
100%.
taxes.
So here's what I do. I work totally different than most lenders. I don't use cheap taxes. I don't use cheap insurance. I calculate 1.5% of whatever they're buying as the taxes for the property.
Okay.
I calculate 1% of whatever they're buying as the insurance. So if you look, $4,050 for a $270,000 property is pretty realistic taxes. You know what I mean? It'll still go up the next year, probably by another $1,000, but I'm not worried about the client finding a house at $270 that costs $4,000 in taxes. You see what I'm saying?
Yeah. Okay.
And the insurance as well, $2,700 is because what a lot of lenders love to do, Teresa, is they'll say, oh, you want to hit 270, or let's say you want to hit 300. Okay, perfect. So all you got to do, you see how this doesn't work, right? But the lender will tell you, all right, so let's put you, look, you need to find me a house at 300,000 with 2,500 in taxes, and the insurance needs to come out at 1,500. And oh, look, they qualify. But then you're going to be the one going crazy trying to find a house at 300,000 with 2,500 in taxes. And I'll tell you what else. More likely than not, the underwriter, when that loan gets to the underwriter, they're not going to let them use these taxes because they're too low. It's called a payment shock. So the underwriter is going to go in there, and there are guidelines on this. If the taxes on the property are less than 1% of the purchase price, we're supposed to hit them with 1.5% of the purchase price. Guess what number I'm using automatically on every pre-qualification?
What are you using?
5%.
1.5. Okay.
You know what I mean? So that it eases the stress on you of finding a house with that criteria. You just need to find a house. I'll give you the numbers. You need to find a house within that. I'll give you 3 numbers specifically whenever we do a pre-qualification: the purchase price, the tax amount, and the HOA that they can do. You find them anything there or less, and anything will work. You know what I mean?
Okay.
Otherwise, again, it is a sneaky thing that lenders like to do, where they will bring those taxes and that insurance down just to show the client what they want. And it's, in a sense, almost a disrespect to their agents who are out there wasting their time showing properties that they don't qualify for.
Okay.
Any other questions on this part?
No, it's very, very good. Very good.
Perfect. Again, I literally do this worksheet with every single client in front of them in our pre-qualification. So, all right. Income, I think we're good on. Credit. Does anyone know minimum qualifying credit scores?
650.
No, not quite. So FHA is 580.
580.
And conventional is 620.
Okay.
Now, this is going to sound like common sense, but logically, if you have a 580 or a 620, you are not going to be getting a 2% interest rate. And I explain this because people sometimes they say, "Oh, but I qualify." Yes, you qualify, but just like when you buy a car, your credit score affects your financing. It's incredible that I have to explain that, but you would be surprised. I get those kinds of questions. Now, when you're asking the client, because you're supposed to be asking the clients these questions, right? When you get to the credit, it's not just what is your credit score. I can help them fix their credit. That doesn't concern me so much. It is, okay, client, do you have any idea what your credit score or where your credit's at? Okay. Perfect. You're at a 650. Awesome. Now, a couple other questions. Have you had a bankruptcy? Have you had a foreclosure? Have you had a short sale? Have you had any derogatory accounts recently? Have you had anything like a repossession or anything recently that would seriously affect your credit? More than likely, no, right? Now, the next thing is very important. Get a brief idea of their expenses. Just briefly ask, hey, question, by the way, do you have a car? Is it financed? Is it on your credit? Do you have just one? And one last thing, do you owe a lot of money? Like, do you have a lot of debt? You know, maybe like student loans, you know, stuff like that. It's a lot of things for you to ask, but it will save you that extra 5 minutes to 10 minutes on the phone with the client asking these questions will save you a week of work, because you will identify immediately if you think they're worth your time or not. You know what I'm saying? Why do I ask about the cars? Well, let's go back to this guy, right? Who was at, what was it, 270, I think? 270 is his maximum. But now he has his car, and he also has his wife's car at 250. And suddenly he no longer qualifies for that. You see what I'm saying? Mm-hmm. So always ask those questions. So income, first question, are you still working? Do you work W-2 or self-employed? If you're self-employed, was it net, right? If you don't remember if it's net or gross, do you remember if you filed a lot in taxes the previous 2 years? And then obviously confirm that they have been working and declaring taxes for the past 2 years. That's income. Credit. Where's your credit score, more or less? Have you had a bankruptcy, foreclosure, short sale, anything like that? Do you have a lot of expenses on your credit? How many cars do you have? Do you have student loans? Anything like that? Perfect. Assets. How much do you guys think that someone needs to buy a home minimum? I will usually tell people between 15 and 25,000, depending on what you're buying. Money doesn't necessarily have to be from the borrower. It can be in the form of a gift. It can be, there are multiple other forms that they could be from 401k. It can be a gift. It could be from their checking and savings. But it is important that we know cash is not acceptable. When we start the loan, the bank is going to ask for 2 bank statements for 2 months prior. If we see big cash deposits that aren't regular, the bank will question it, and the borrower likely won't be able to use those funds for the purchase. Questions on the 3 things that we need for a pre-screen or a pre-qualification?
May I ask a question?
Absolutely.
On the cash, gift letters, can say that a parent gave them the money in advance and they deposited it in the bank because they don't know. So here they are, they have $15,000, $20,000 that they deposited at one time.
Okay.
Because the parents gave them that money. How can you, with a gift letter, can you substantiate that, or will the banks accept it or not after the fact?
How long ago was it, for example?
I don't know, maybe within the 2 months.
Okay. So it depends which loan program we're going with. Okay. Sometimes we may say, hey, look, just don't show that one bank statement. We're going to need a new bank statement. You know, if it was 2 months ago, we could probably get away with just not showing that deposit, depending. Otherwise, yes, if it is an FHA loan, I'm going to need a gift letter, and I'm going to have to see the parent's bank statement to show the money leaving the parent's bank statement, going into the son's bank statement, and then a gift letter to tie it all together. Make sense? Okay.
Yeah.
If it is conventional, I usually tell people, don't move the money. If it's conventional, the gift owner wires the money straight to the title company the week of closing, and then I don't have to document the money leaving one and going into the other, then to title. You know what I mean? It makes things smoother. It's an easier paper trail to handle.
Okay. Okay. Okay.
Answer your question well?
Yes, thank you.
No, my pleasure, my pleasure. So going back, no further questions on the 3 things that we need, right? So going back here real quick, you guys get a lead. Let's go back to that new, fresh, anxious realtor who's just starting, right? I've had this happen a lot where I'll get a realtor, they'll get 5 leads from the office, and they'll automatically forward me the contact information for 5 clients to say call. That realtor is probably not going to get the same service as, you know, let's say Esther or Teresa or Jose, who called the client, got the information, and they say, Bruno, I called 10. I think 2 are good. What do you think? This is what I got. I already got their documents, or here, look, I asked them, but they didn't want to send me documents, but if you talk to them, they probably will. Listen, at that is the agent that is going to get any lender's attention. The one that helps, the one that facilitates. It's not that we don't want to. It's just that it does. Things are crazy right now. Look at the real estate market. And this has been an integral part of most successful agents that I work with nowadays, what they're doing to make sure that their business keeps running efficiently. And in turn, they don't get discouraged, because what happens to a lot of agents is they get stuck between lead, lender, lead, lender, lead, lender. And in between, everyone that calls them, they show a house, or it takes them a week to get a response from the lender on the pre-qual, because the lender had to request documents and the client didn't send it for 2-3 days because he was working. And you turn something that could take a day or 2 into a week or 2-week ordeal. And then the realtor gets discouraged because she says, this is a scam, this isn't working, I don't get it. I keep getting leads, I keep getting clients, but nothing ever closes, no one qualifies. Well, that's probably because you're getting a client and you're losing a week or 2 on that client just to find out that they don't work. So if I could teach you how to pre-screen and identify from the get if they're worth your time or not, in the time in that week that it took you to work 1 client, you could have worked 20. And out of 20, you're way more likely to have someone that qualifies. Make sense? Perfect. All right. So again, my recommended method, get the lead, do a little pre-screen, see if you could collect the docs. If you can't, go ahead and reach out, and we'll speak with the client. And then we have our pre-approval appointment with the client. Okay. Once the client is pre-approved, you're going house hunting. I'm going to give you, again, I'm not that typical lender that just gives you a pre-qualification letter and says, go find. I'm going to give you criterias. I'm going to give you feedback. I'm going to tell you, listen, they want a single family home, but at 245, you may want to show them townhomes. So show them whatever you could find at 245 single family, but also throw in some townhomes. Now their limit for the townhome is going to be 245 with $3,500 in taxes and a $150 HOA. Go hunt. You know what I mean? And that way you know how to steer the client. That way you know what they do and don't qualify for. You're not stuck there just assuming that because they had a letter for 250 that they qualify for anything that's 250. Once you go hunting, you start putting in offers. Once you put in offers, eventually you will get a contract. One of the things that I do to help my agents, I will personally reach out once you put in an offer. If it's a solid offer, if the client's like really serious about it, I will help you. I will call the listing agent, introduce myself, let them know who I am, give them my direct contact information. Usually this is very effective in helping people get their offers accepted. Okay. Once we get the offer accepted, we have the contract. From there, we move on to the loan process. Is everyone more or less familiar with the loan process? Does everyone know like the steps, what it takes, what's involved? Perfect. So I think that's going to be the last part I'll get into for today because I have a couple appointments coming in, but let's go over it real quick. So loan process. So number one, we get the contract. The lender, when we get the contract, we're going to work on the disclosure package. What does a disclosure entail? Okay. Automatically, we're going to start working on two things. We're going to start working on the actual disclosure package itself, which is basically the formal 1003, as they call it. We're going to take all the information. We're going to ask the client everything about their lives. Where have you lived for the last 2 years? Where have you worked for the last 2 years? You know, are you a resident? Are you a citizen? We're going to go over everything. Have you ever had a foreclosure, bankruptcies, any properties under your name and title? Go through absolutely everything with the client, right? At the same time, we're going to send them a needs list. As we ask them the questions on the 1003, or let's just write 1003 here, or application, okay? As we go through the application, we identify things. For example, oh, client, so question, do you have any children? Yeah, I have 2. Oh, okay, question, do you pay child support? Oh, yeah, I forgot to mention to Bruno that I pay child support. Okay, perfect. So now I'm gonna need the documentation for your child support agreement. I'm gonna need your marital settlement agreement. You know, I'm gonna need this documentation to prove how much you pay, for how long are you paying, right? So that is an example of a document that would come up at application that we would put on the needs list from the application. So we send these both out to the client. And the client signs and returns these to us, okay? So we got the contract. We start working on the disclosures, which include the 1003, which is the loan application, and the needs list. The client signs the loan application and returns the needs list to us. That moves us to the next stage, which is openings. The opener is going to order the appraisal. She is going to order title. Actually, let's do this. And she is going to sub to processing. Okay. The processor is the person at the bank who is going to check the loan. She is a middleman between the loan officer and his team, so me and my team, and the underwriter. The underwriter is the one that has the final say. So what happens? Opener grabs the file. Usually the disclosures we do within 24 to 48 hours, okay? Once we get this back from the client, we submit it to openings, also 24 to 48 hours, for them to do these 3 tasks: appraisal, submit to processing, and order title. From there, we get into processing, where again, the processor is going to review all of the documentation that we've had so far, review the application, everything that we have, and decide, is this good enough to submit to underwriting, or do we need more? If we need more documentation, obviously we're going to reach out to the client, wait for them to get it back to us. At this point, we're losing days, right? Hey, client, you never gave me those child support documents. I need you to hurry up. I need you to hurry up. I need you to hurry up. And we're just burning through days sitting and processing. Otherwise, if everything was good and the client was good and he gave us everything in time, she'll be able to submit to underwriting. The underwriter, she will approve, suspend, or deny the loan. Depending on how good your loan officer was, this one shouldn't happen so often. More often than not, we will get the approval. What is the approval? The approval is also known as the loan commitment. So disclosures usually takes about 24 to 40 hours. Openings usually takes about 24 to 48 hours. Somewhere kind of in between processing and underwriting, we will usually get our appraisal, okay? Somewhere kind of in between there. Processing usually takes, I want to say it's 24 to 48 hours. Or no, I think it's actually closer to 72 hours, excuse me. And then underwriting at any bank in 2020 is taking 1 to 2 weeks. Volume. If you guys have been putting in offers on properties, if you guys have been listing properties, you guys see the volume in the market. If it is that busy on the street, imagine in the banks, imagine in the title companies. It is, everything is taking longer than it's supposed to. That is normal this year. That is the reality of this year. It doesn't mean that we can't close on time. It just means that we have to be extra diligent about getting things up front so that we don't get stuck in processing. So that we don't, you know, when the underwriter gets to the file, she doesn't suspend it. Instead, she approves it, right? With our approval, with our loan commitment, this file goes back to processor, back to loan officer, and we request the documentations from client. So once we get the approval from the underwriter, it goes back to the processor, back to the loan officer. We reach out to the client and tell them, hey, congratulations, everybody. Here's a loan commitment. We're approved. Client, I need A, B, C, D from you in order for us to close this back. When the client gets us the documents, when he gets us the needs list, right, the loan goes back to the processor and then back to the underwriter. Separate these a little, there you go. So it goes, so after approval, loan goes to the processor, to the loan officer, to the client, then from the client, back to the processor, back to the underwriter. It's basically just going back the way it came. Remember, the middleman is the processor. She's always intertwined in between us and the underwriter. So this whole step here, depending on how long it takes the client to get us things back, could take anywhere, I want to tell you, probably about a week to a week and a half, depending on how quick the client is. From there, right, this is back to underwriter for CTC, for clear to close. From here, we get the clear to close. From clear to close, the underwriter sends to closing department. And that is when we finally get into closings. Now, it is typical that in banks, the only person who can truly adjust the final figures for the client is the closer. And the closer doesn't even see this loan throughout the whole transaction until we have our clear to close. So this is why whenever I create an estimate for a client, I leave all of my numbers inflated. I'm not the Goodwill of loans. I don't try to show them something super cheap so that at the end of the day, they pay more the day of closing. I give them inflated, realistic numbers so that if the insurance comes in higher, if the taxes come in higher, if They had to pay for a second reinspection of an appraisal. Something happened, they need more money. Usually they'll still have enough accounted for in their budget because I overestimated, not underestimated, and I'm giving them a little bit of cushion for the what ifs. Because if you guys have been working in real estate for a while, you guys know there's a lot of what ifs. So from closings, we go to the closing, closer matches and balances with title company. And we move to the closing table. As you guys can see, there are typically about 3 times that we request documentation from the client. So for the next time, whenever a client tells you, and again, work with your loan officer, be a team, support them, support each other, help each other, grow together, right? The next time that you get a client and you're under contract and they complain about how many documents the loan officer needs, you go right back to your client and you tell them, hey, do you want the loan? Then you need it. Legally, believe me, they don't want to bother you. It is what the government mandates that they need to document. 3 needs lists, they could be short, they could be long, depending on the client's situation. And, you know, just so you guys have an idea, because I do get a lot of these questions about, Bruno, I don't understand the loan process. I don't understand how long it's supposed to take. I don't, you know, I tell everyone, typical contract, 30 to 45 days. Typical loan commitment period, 30 days. Typical closing, 45 days. Now, guys, be aware. If any of you have closed a transaction this year, you know that these are being delayed. Speak to me, speak to whichever loan officer you're working before you get into that contract, and just make sure that you're in agreement. Most of my contracts, I tell everyone, guys, remember pandemic, remember the volume. I'm going to target the 30, 45 days, but if for some reason I need a little bit more time, will you help me with an addendum? And most of the times the answer is yes, because it's happening to everyone across the industry nowadays. Just, you know, again, transparency, communication, it's key in this business. Being open, transparent, letting people know what's going on. Hey, if there's a disaster on the file, I'm going to call you. I'm going to let you know. Hey, look, this is what's happening. You know, A, B, and C happened. I think that I can resolve it with D. But that communication, that transparency is everything. And creating that relationship with your loan officer, working as a tight-knit team, you will notice the difference. You'll notice the difference in your ability to pre-screen effectively. You'll notice the difference in your ability to grow your business. You'll notice the difference in you understanding why you're asking these questions and why they're important. And you're going to notice the ease at which you're gonna not breeze through, because every transaction has some drama, but you're gonna notice the difference in your stress levels throughout this whole process of closing out a loan. Questions, concerns, anything? Nothing at all? All right, guys. So I'm cutting today a little bit short because I have an appointment coming in. It's actually supposed to be at 11:30. I do thank all of you for attending. I usually do these kind of bilingual, I'll kind of sway from English to Spanish and Portuguese and everything in between. But I was asked to do this one in particular in English because I do know that there are a lot of English speakers at Real Estate Empire. And, you know, most of these classes are usually in Spanish. So anything you guys need, I am here to help. I will leave you with my contact information right here in the chat. If you guys have any questions, any concerns, you have, you know, anyone you want to get pre-screened, anything of the sort, I am here to help. Again, I am with PRMG Dadeland. I am one of the top producers here, and, you know, here to help you guys grow together, and feel free to give me a call. Anything else? Good? Awesome. Thank you, everybody. Everyone have a wonderful day, and we'll be in touch.